We are responding with countermeasures worth 26 billion euros.
But with the US now throwing down a 20% tariff, that 28 billion, kinda tiny in comparison.
European Union, they're very tough, very, very tough traders. You think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%.
Some people are saying it's only like 1/10 of what the US just brought to the table. So yeah, the EU's got big guns, like huge, but the real question is, do they really want to pull the trigger yet? Nobody wants to be the one to start a full-scale trade war, because once you cross that line it's like dominoes, retaliation after retaliation, and soon you're not talking policy anymore, you're talking damage control. Let's not forget about tech and digital services. The US is out here running a massive surplus, like $100 billion worth of exports going straight to Europe thanks to all the Silicon Valley heavyweights. If the EU goes after that, it would hit US tech giants hard. But obviously that would be opening a whole other can of worms, because the US would fire back fast, and then boom, we're in full-on trade war territory. And literally no one over here wants that. So now there's this frenzy of diplomacy capitals sending reps to chat with the EU's trade boss, trying to figure out a game plan that avoids a straight-up mess. The vibe is very much let's work something out, but if we get ghosted, we're coming in strong. And it's not just about money, it's about respect, about balance, and about making sure no one gets steamrolled in a so-called partnership. Now, is this hitting all EU countries the same way? Nope, like size matters here. Think Germany with its car industry, or Italy and France with all their fancy designer stuff, German cars, Italian fashion, big targets. But at the end of the day, doing business with the US is just gonna cost more for everyone. That's the bottom line. So instead of playing the who's suffering more game, the EU is treating this like a universal headache. Billions of euros and dollars cross the Atlantic daily, so yeah, this has ripple effects on everybody.
I have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade.
It's bad news all around, and that's why there's this mad dash to avoid going nuclear. Because when that kind of cash flow gets disrupted, it's not just companies and factories that feel the pain, it's everyday people, workers, families, even local businesses. No one wins in a trade war, and get this, people in Brussels aren't even sure the Trump admin is really open to talking it out. There are whispers that the US isn't even trying to meet in the middle, and they've made it pretty clear if the EU hits back, they'll hit back even harder. So yeah, that's where we are. It's like a big game of economic chicken, who's gonna swerve first. And nobody wants to be the one who caves, especially not with elections and approval ratings on the line. Leaders want to look strong, but they also know that pride alone won't pay the bills.
As a result of these colossal trade barriers, 81% of the cars in South Korea are made in South Korea. 94% of the cars in Japan are made in Japan. Toyota sells 1 million foreign-made automobiles into the United States, and General Motors sells almost none. Ford sells very little. None of our companies are allowed.
Now let's switch scenes. 25% import tariffs just went live on foreign-made cars, and we've got Marina from the Biz team over in Wolfsburg, Germany, aka Volkswagen HQ. She's out there with the update, and it's looking real grim. It's sunny outside, but the forecast for Volkswagen: cloudy with a 100% chance of panic. The US was literally the only market where Volkswagen was still seeing growth, because their sales in China have been slipping. But now exporting cars to the US, that just got way pricier. Volkswagen does have one plant in Tennessee, which makes the Atlas their big family SUV, so that one's safe. But their other star models like the Jetta, not so lucky. Those are getting slammed with tariffs, which means they'll be more expensive and less competitive in the US. And don't even get me started on Porsche, which by the way is part of the Volkswagen fam. They don't have any factories in the US. So literally every single Porsche sold in America is now facing those steep new tariffs. And fun fact, 1 in every 3 Porsches gets shipped to the US, so yeah, this is a major deal. Same story for BMW and Mercedes. It's not just a Volkswagen thing, it's a Germany-wide car industry problem. And if you're still locked in with us at this point, you're clearly the kind of person who likes seeing past the headlines. So here's the deal: hit that like button, share it with someone who needs a better understanding of what's really going on, and yeah, leave a comment with your hot take. Let's get that convo going. So what's the plan? Well, brands like Porsche are already warning their US dealers that price hikes are coming, and they're gonna announce the new price tags by mid-April. German carmakers are in a tight spot. Do they raise prices and risk losing customers, or do they start pulling cheaper models from the US lineup altogether? Like Mercedes has some smaller SUVs, that with these tariffs, just don't make sense to sell in America anymore. So yeah, fewer models on the market, less variety for US buyers. And that's just the start. If this thing keeps escalating, you could see supply chains rerouted, dealership strategies flipped, even marketing budgets shredded trying to explain why your favorite model just vanished. Now long term, here's the kicker: will these tariffs actually push German car makers to move more of their production to the US? Experts say maybe, but don't expect any factory ribbon cuttings anytime soon. It's super expensive to set up production abroad, and the CEO has already said, yeah, that's not something you just do overnight, it would cost a ton. So in the short term, not happening. No big moves expected. But in the long run, we'll see. If these tariffs stick around and the pressure keeps building, then yeah, relocation might become the only logical move left. But again, that's years down the line, and the road to get there is gonna be bumpy. And let's not ignore the PR side of this. European companies, especially luxury and car brands, now have to manage not just their supply chains and costs, but also their image in an increasingly divided market. Some American consumers might double down on buying local, while others might be turned off by higher prices or limited availability. Meanwhile, back in Europe, brands have to reassure shareholders that they're not being left behind in a market that used to be their bread and butter. It's a whole new level of corporate chess. So yeah, here's where we're at. Europe's on edge, the US is flexing, businesses are scrambling, and no one really knows who's gonna blink first. What's clear though is that this is way more than just numbers and percentages. This is about power, pride, strategy and survival. And the next few months, they're gonna be wild. And if you're still here, major props, you clearly vibe with the deep dive, so why not subscribe, if you haven't yet? Join the crew, stick around for more unfiltered takes, and let's ride this economic roller coaster together.